Decision-making and ethics. When it comes to decision-making, the number of potential questions and decisions are endless. Thus, users of financial statements need to understand enough about accounting and the financial statements to get their questions answered. This table provides questions financial statement users often ask about companies and indicates where on the financial statements the answers might be found. You are welcome to pause the video if you'd like to read them in detail. Otherwise, we will continue on. Good business requires decision-making, which in turn requires the exercise of good judgment, both at the individual and corporate levels. What are the factors that influence business and accounting decisions, and how should these factors be weighted? Generally, 3 factors influence business and accounting decisions: economic, legal, and ethical. The economic factor states that the decision being made should maximize the economic benefits to the decision maker. Based on the economic theory, every rational person faced with a decision will choose the course of action that maximizes his or her own welfare without regard to how that decision impacts others. In summary, the combined outcome of each person acting in his or her own self-interest will maximize the benefits to society as a whole. The legal factor is based on the proposition that free societies are governed by laws. Laws are written to provide clarity and to prevent abuse of the rights of individuals or society. Democratically enacted laws both contain and express society's moral standards. Legal analysis involves applying the relevant laws to each decision and then choosing the action that complies with those laws. A complicating factor for a global business may be that what is legal in one country may not be legal in another. In that case, it is usually best to abide by the laws of the most restrictive country. The ethical factor recognizes that while certain actions might be both economically profitable and legal, they still may not be right. Therefore, most companies and many individuals have established standards for themselves to enforce a higher level of conduct than that imposed by law. These standards govern how we treat others and the way we restrain our selfish desires. This behavior and its underlying beliefs are the essence of ethics. Weighing tough ethical judgments in business and accounting requires a decision framework. Following these 4 steps will guide you through tough decisions. What is the issue? Who are the stakeholders and what are the consequences of the decisions to each? Weigh the alternatives and make the decision and be prepared to deal with the consequences. Many professional organizations and businesses adopt their own ethical guidelines or codes of conduct. The American Institute of Certified Public Accountants, or AICPA, is one such organization that provides the industry a code of professional conduct for all of its members. It provides guidance to members in the performance of their professional duties. The AICPA Code of Professional Conduct is comprised of several principles that form the basic building blocks of ethical and professional behavior. Those principles include responsibilities. Members have responsibility to those who use their services and to each other. Members should exercise sensitive professional and moral judgments in all of their activities. Public interest. Members have a responsibility to the public. They should accept the obligation to act in a way that will serve the public interest, honor the public trust, and demonstrate a commitment to professionalism. Integrity. Members should perform all professional responsibilities with the highest sense of integrity to maintain and broaden public confidence. Objectivity and independence. A member should maintain objectivity and be free of conflicts of interest. A member in public should be independent in both fact and appearance when performing audit or attestation services. Due care. Members should observe the professional's technical and ethical standards. They should also strive to improve competence and quality of services. Scope and nature of services. Members observe the principles of professional conduct in determining the nature and scope of the services to be provided. There are ethical considerations in accounting. You have investors and creditors who want good information, useful, correct, relevant information, and companies want to look profitable and want to attract those investors and satisfy their creditors. Sometimes those two viewpoints are in conflict with each other. So, when a company is having trouble, they may be very hesitant to report such problems and may be tempted to paint a better picture than what is true and correct. Most accountants do their job ethically and professionally. However, from time to time we do hear of accounting scandals. A couple of the more well-known scandals within the last couple of decades are Enron and WorldCom. As a result, the government has passed legislation called Sarbanes-Oxley, or SOX, to restore investor confidence, which we will discuss in a later chapter. So, got ethics? You'd better.